Hi, everybody. This is Ellman, the Blue Collar Investor, and welcome to this BCI podcast number 58, titled, Is This Trade a Winner or a Loser? And we're going to use a real-life example with Energy Select Sector Spider Fund, which trades on the New York Stock Exchange under the ticker symbol XLE. Now, these trades were shared with me by one of our BCI members, Van, and the time that I received his email was on June 23rd, 2019. Here are his trades. On May 20th, 2019, he purchased 500 shares of XLE at $63.78, then immediately sold the slightly out of the money June 21st, 2019, 64 calls for $1 a share. Now, 2 weeks later, XLE declined in value from $63.78 down to $59.52, more than a $4 per share price drop in a very short period of time. Because share price declined, the value of that 64 call option also declined. Now, we get to keep the original full amount, but we can buy it back and close it out at a much cheaper price. In this case, Van was able to close out all 5 contracts for 2 cents a share, $2 a contract. Now, no action was taken until I received Van's email on June 23rd, 2 days after contract expiration. Let's first talk about realized versus unrealized results, and then we can kind of make some sense of these trades. Now, stock results are unrealized unless the stock is sold. So once the stock is purchased initially, whether it goes up or down, those gains or losses are unrealized unless the shares are sold. Now let's look at the option leg of a covered call trade. Now, the option results also are unrealized unless one of 3 things take place. Number 1, the option expires worthless. If that's the case, then the entire premium was profit. The option is closed, which is what happened here with Van. It was sold for $1 and bought back for 2 cents. So $98 per contract was realized profit. The third thing that could realize an option result is if it is exercised. And that is not what happened in this case. So expires worthless, is closed, or is exercised. There are 3 reasons how an option position can become realized. Now, let's first have a look at how Van initially structured this trade. We're going to use the multiple tab of the Ellman calculator to get the unrealized 1-month return. XLE was trading at $63.78. The out of the money 64 call was sold for $1. So this represents a 1-month return on our option, initial time value return of 1.6%. Now there's an opportunity for an additional 0.3% if XLE moves from $73.78 up to the 64 strike, giving us a max return of 1.9%. Now, that's not what happened here. The price of the stock initially declined in value. So now let's take a look. We'll move forward 2 weeks and look at the status of this trade as of June 3rd, 2019. Let's first look at the option side of the trade. Well, the short call was closed by the close at 2 cents. So that means the net credit on the option side was $1 minus 2 cents for a net realized profit of 98 cents a share, $490 for the 5 contracts. That's cash we would not have received had we not sold the option. Now let's look at the stock side of the trade. The stock side is still open because the per share unrealized loss is $4.26 a share. It was purchased at $63.78, and on June 3rd, the price was $59.52. So for the 500 shares, that results in an unrealized $2,130 loss. But the story has not been completed yet. Now, for those of you watching this podcast, I have a chart here. For those of you listening to it, you can visualize this. The price of the stock goes down dramatically, and then in a short period of time moves back up dramatically. So you have that classic V-shaped pattern, which should remind all blue-collar investors that there may be an opportunity here to hit a double, because we could buy back the option at a much lower price than it was sold for, in this case, 2 cents a share. And then as the price accelerates, we could resell that same option. Now, we may not get $1 again, but we're going to get something much greater than 2 cents. So it's an opportunity to generate 2 income streams in the same month with the same cash with the same stock. In the BCI methodology, we reference that as hitting a double. And that opportunity existed from June 3rd through June 21st. But that's not what happened. Van took no action, and I received the email 2 days after contract expiration on June 23rd. So now let's analyze this trade as of June 23rd, 2019. And we're going to identify that opportunity lost, hitting a double. So the share unrealized loss at this point in time is only 22 cents a share. That represents $110 for the 5 contracts of 500 shares. Now, if the shares were sold on June 23rd, the combination of option credits and share losses would result in a realized credit of $380. That's $490 on the option side, minus $110 on the stock side, $380. Now, the cost basis was $31,890. That's 500 shares at $63.78. So this 34-day return resulted in a profit of 1.19%, and that would annualize out to 12.8%. Not so bad. So overall, had the shares been sold on that day, Van would have had a successful series of trades. Now, at that point in time, the shares were not sold. So way to frame it is the final chapter has yet to be written. But it's up to Van. He could sell the shares and generate that very nice 1.19% 34-day return. Now, Van could have done even better. Had he resold that option between June 3rd and June 21st, definitely could have made additional option premium on this trade. So that represented an opportunity lost. Let's summarize. When evaluating the results of our option selling trades, we must define and categorize realized versus unrealized conclusions. Now, option selling lowers our cost basis, and that, ladies and gentlemen, is the reason why we should beat the market on a consistent basis. This is not rocket science. Now, for anybody who purchased XLE when Van did, but didn't sell the option, would have had an unrealized loss of $110. Instead, Van had a realized gain of $490 on the option side, leaving a net gain of $380 as of June 23rd, when viewing both legs of the trade in its totality. So Van did well and could have done even better. Every trade we make could represent a learning opportunity. In this particular case, this story had a happy ending. Van made money. That's good. Now, the lesson learned is that Van could have made even more money had he taken advantage of the hitting a double exit strategy. And that's why learning process never ends for all of us, including me. So congratulations, Van, on a successful series of trades. Next time, you're going to make even more money when you're in a similar situation. Let me remind everybody that we have a myriad of free resources on the Blue Collar Investor website, www.bciinvestor.com. thebluecollarinvestor.com, which includes hundreds of blog articles that I've published. We have the free resources link on the top black bar of our web pages, including the basic Ellman calculator, a put calculator, and much more. We have the Beginner's Corner tutorial on the right side top of our web pages, which is an overview of covered call writing and selling cash secured put strategies. Series of 8 video tutorials, about 10 to 15 minutes each. It's free, and you can download the PowerPoint slides for free as well, and much more. Take a look around. There's a lot of free resources on the site. Now, in the bluecollarinvestor.com store, we have books in various formats, PDF. We have books in hard and soft cover, as well as video tutorials, online streaming DVD programs. They're all online and streaming because they're not making DVD players anymore, and we can provide them to you at a much lower cost. They all come with downloadable workbooks as well. We have multiple calculators that we've created that will assist in various option selling strategies. Have a look there. We also have trade planners and online mentoring programs, all on www.thebluecollarinvestor.com/store. So folks, I want to thank you very, very much for taking the time to listen to this BCI podcast, number 58, Is This Trade a Winner or a Loser? I hope you enjoyed it. And most importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.